Yeah.
Okay, today on the podcast, we're talking with Ty Crandall, CEO of CreditSuite. Ty has spent years helping entrepreneurs secure funding and building real business credit without personal guarantees. His work has been featured in Inc., Entrepreneur, and Forbes, and his company has helped thousands of businesses access the money they need to grow. Ty, thanks for joining me today. Appreciate you coming on.
Man. I'm excited to be here.
Yeah, definitely. I am really interested in origin stories a lot of the time here. Can you share with me a bit about your journey in funding CreditSuite?
Sure. Yeah. I mean, I got out of high school, was in the military, and then got out of the military, explored a lot in sales and marketing, and then ended up founding my first company, which is actually a mortgage company. Took off, built it to, 7 figures, and then the mortgage crisis occurred, and I kind of saw firsthand what it's like to build something and then kind of watch it dismantled, in large part for things really, completely out of my control at that point. I mean, what I did in the industry, jumbo loans, kind of went away overnight. You kind of trying to shake that off. I realized, I think for the first time, that the difference between, running a business to make money and running business legitimately to help people. And that just almost financially devastated me. I mean, it pushed me almost to the brink of personal bankruptcy. So from that point, I got in the consumer credit business, started helping people fix consumer credit. Then along the way, a lot of people asked me about business credit, and I really didn't know much about it, even though I'd spent a long time in financial services. And when I kind of started to dive in and figure out what business credit was and how it worked, I realized it really would have saved me from, the business could have collapsed in the mortgage side, but personally, I would have been really untouched if I would have understood business credit, separating personal and business liability. So we started offering business credit to our clients, eventually sold the consumer credit business. And it's been, I guess, 15 years now. We've had the company helping people in the business credit and financing space. And that kind of brings me to where we are today.
Man, I had so many feelings as you were going through all of that, because I'm thinking to myself, like, whoa, what was happening with me during that housing crisis and everything? I was at Merrill Lynch. I just saw Lehman Brothers go under, the mortgages were going under. And I just love how it speaks to your resilience. And I'm imagining a lot of that was digging down deep from things you had probably learned in the military, but you started helping people out with even a personal pain that you were having, which was, you said you were on the brink of bankruptcy. Well, why don't I help people with personal credit?
Yeah.
That's just like poetry, man. I love that.
Appreciate it. Yeah. Yeah, it was quite the journey, but I mean, it literally, I think when you experience that much pain, and I have a lot of memories from, trying to pass bad checks to get the electric on, for my then pregnant wife, and I mean, so many things. But when you go through that kind of pain, you just really want to help other people avoid that pain as much as you can. And I've been on that journey for the last, couple decades since. So.
Yeah, I love it. So now, like, let's kind of come to the present day. Like, what does a typical day look like for you now as a CEO?
I love CreditSuite. I mean, it's cool. I think about that every day, that I get to wake up and do what I love. I'm one of those guys that I think when somebody tells me what they do, I'm like, oh, I want to do that. That sounds awesome. And then somebody else tells me what they do, and I'm like, oh, I want to do that. That sounds awesome. So it's pretty cool, because I get to be in a world now where we just get to work with so many different types of businesses and hundreds of new clients every single month. And then, get to hear what they want to do, their vision, and then help them get the capital, and then watch them execute. It's super cool to watch people go from, one tow truck to, a fleet of tow trucks, or, somebody go from launching a contracting business to, building it into 8 figures and beyond. It's just, there's so many stories, but it's interesting when you have an entrepreneur that has that drive and determination, and then you put money in their hands, and then you get to see like what they do with it. And you kind of feel like you're a little bit part of it, along that journey. It's pretty cool. Day to day is just, at this level, I think it's a lot of meetings, a lot of, podcast interviews, things like that. We're creating a lot of content, and it's been interesting to see the landscape change, over the last, 2 decades, whereas content creation's way more popular now than it was. I mean, I remember, just being the only search that you'd find on YouTube for business credit, and before TikTok was here and Instagram and things. So
Yes.
it's been a really cool journey to watch it all develop to bring me to where we are today.
Yeah, thanks for summing that up. I am really interested in, yeah, just transitioning to that, like the major shifts that you've seen. Obviously, you said you were kind of like a man on his own island there for a bit, right? And now with the advent of content creation and how much it's been pushed, like what are the major shifts you're seeing just in financial services in general around, client acquisition, retention, all that kind of stuff?
Well, it's interesting because when we first launched, we had like an info marketing approach, which means that, we were just out there just to give free information through webinars, through, ebooks, guides. And that just was not a popular thing. I mean, I'm not saying we started that because we didn't, but we were definitely one of the first ones in the industry that was really grasping that kind of philosophy. And so many just did not understand it. Everybody was transactional and selling. When we just believed you give, you teach, you educate, and then people will want the faster path and they kind of come to you for that faster path. Nowadays, it's changed where that's almost the approach, because now when you look at TikTok and you look at so many social channels, now a lot of companies out there, a lot of individual creators are out there producing content about what they're experiencing in the world, what's happening in the world, and providing value to other people from their own experience. And so that's been really interesting to watch, to see it almost shift from a company strategy perspective to an individual strategy perspective, where people are just out there talking about their own real life experiences, and then other people are using that to be able to do what they're doing with it. So I think that's interesting. On the other negative side of the coin is you have a lot of people out there that talk about things that they don't necessarily understand. And they're talking about things that work for them. And then other people think that those things will work for them. And they kind of don't, because, every individual and every business is so much different. So that's been really interesting to watch the development of just so much content getting produced. And sometimes it helps and sometimes it does help. Sometimes, oftentimes it puts people on the wrong path. So I think that's
Oh,
been interesting to see as well. And I also think it just becomes more and more and more important that you're following up, that you have funnels that are created, and that you're continuing to provide value to the prospects that you're talking with, and especially the clients that you're talking with. So I think those are things that I've seen a lot of changes with. And now I think we're in this world of personalization. People really want a personal experience created for them, no matter what product or service you're offering. And that's been a big shift I've seen over the last few years. It's just, we do a lot of software to help business owners get money. So it's interesting to watch the need and almost the demand for personalization. It's really something that's now an expectation, I think, that people have, where the experience in working with your business is personalized and customized, to them, versus just be something that's kind of the same, a cookie cutter for everybody. So just some of the interesting trends I've seen.
yeah, there's kind of obviously a lot of directions to go in that. Potentially thoughts kind of go towards one thing you said a little earlier about um, some people giving maybe bad information out there in your space. Are you seeing that a lot? Do you feel like there's people who are trying to set themselves up kind of as authority on it and just giving out just bad, bad information?
Yeah, I see more of it bad than good. It's kind of
Uh,
like be careful what you wish for, because when I
yeah.
got started in this space, I just wanted people to know business credit, know it existed, know what it was, know how to get it. And so I always hoped that this would catch fire and that people would talk about it more. And then it did. And I was like, ooh, there's just so much of the information out there that's bad. And it started like in our Facebook group. I think it did start there, but we have like 65,000 in our Facebook group. And it just, so much bad information started pouring in. In the beginning, people were like, Ty, why aren't you correcting this? I'm like, because I, I don't have enough time in the day to like correct all the things out there that are inaccurate. So I kind of see two sides of it. I see one that's just absolute intentional. Like there's this guy on TikTok that says just because you have an entity in the US, that the law requires that you be given $250,000 from banks. It's just, I mean, you have finance experience. Like it's just ludicrous. And all you have to do is like buy his ebook to figure the thing out. So I think part of it's just, manipulation and intentional deception. And then the other part is just like I said, I think people are trying to teach what they know and understand. It's just, what the way they perceive it. Oftentimes, if you're in the industry a long time, it's not necessarily accurate. Or in other times, it's things that work for them, but it really wouldn't work, for other businesses and other industries and other situations. So I see more of that where people are trying to teach their experience, and then other people kind of take that as the way to go. And then it's just not necessarily feasible for what they're teaching to actually apply to most other people, let alone sometimes even a few other people. It really wouldn't work for besides them, their individual circumstance.
Yeah. I think maybe it's just good wisdom, right? To understand like, hey, you can't believe everything you see on the internet. But also, I think people have a tendency to go after shortcuts, hacks, right, as we call them. And hacks and shortcuts a lot of times in things like the financial services industry and stuff can actually get you in a lot more trouble than it's worth.
Yeah. Agreed. Yeah, especially like you said, some industries you could do that, and financial services is kind of tough. And that's where I think, we've really mastered understanding what lenders or credit issuers are looking for and just teaching that part of it. And that's to me kind of the way it is like it's like an open book test. Like if you understand what they're looking for, it's just way easier to give it to them. But that's still astonishing to me that there's this whole secret world in financial services that lenders and credit issuers are looking at all of this information about you, and you don't really even know they're getting it. You don't even know they have it. You don't know where they're getting it. And then they're making all these decisions based on information that's out of your control. And that's something I noticed a lot as we've got more into the development of technology and financial services. And I think it just becomes more and more important for business owners to understand, like, here's what they want to see. And if you understand that, like, it's easy to make sure that you set your business up where it is appealing, where lenders and credit issuers really want to give you money versus try to hack and, shortcut the system, which, like you said, doesn't get you very far and oftentimes gets you denied and keeps you from the capital you're trying to get.
Yeah. You probably deal with a lot more of those upfront with, startups and newer businesses, newer business owners who haven't really dealt with institutions and getting money. And it's not always necessary, right? Like there are some great things that you could do up front. But yeah, ultimately to be bankable, for example, for a $5 million loan, a $10 million loan, and getting significant money into a business like that, there are certainly things to understand on, like you say, how financial institutions look at you, look at your business, consider things outside of both of those two things to make decisions on it. So, no, I appreciate your insights on that. How do you see technology, automation, AI, those different things changing the way like your firm operates?
Well, I mean, it's interesting because internal, we won't do anything right now if it doesn't involve AI. Like that is our internal code. So we really see that shifting a lot. So we've always been, we've been the biggest company in the business credit building space for, 15 years. And so what I see is that we've always done a step-by-step process of how somebody succeeds. And I think now the future is just that. It's that using AI for that personalization of where they are in the journey and then what they need to do. Because if you're a contractor or a truck driver, like the path to build business credit is different for you. You're going to be getting different types of accounts and you have different needs to be able to get to where you want to go. So I think that from our perspective, AI is going to change a lot of that. Like we just created what we call Fund Smart AI and this funding blueprint. And with our funding blueprint, it uses AI, and then we'll pull information from like, a D&B credit report score, and then give people personalized recommendations of business credit accounts and funding accounts that they can qualify for now. So, and that's just instantaneous, which is really interesting, Chris, because that was always my goal when we started the business. I'm like, business owners should have every type of funding in one place. And then we tried to tackle it, and it was a freaking nightmare, man. I mean, like to try to understand every type of funding program, the lenders that offer it, the requirements, it was more overwhelming than a human could actually handle. But now AI can do that. A decade and a half of gathering all this information of thousands of lenders and their programs and what it takes to qualify. Now you can plug that into AI and then use that for AI to instantaneously decide, here's all the funding somebody can get. Here's the right lender. Here's the right place to go. So I feel like that's been really interesting to see the ability for business owners to get capital because AI is then able to do those things. The same thing with business credit is that like what we're building now is, we'll give somebody that ability with business credit. Here's where you are. Here's your next steps. And then did you do those steps? Okay, well, here's the next thing. What are you trying to do? Well, I'm a trucker trying to, get fuel cards. Okay, well, here's the next steps to do that. I'm whatever it may be, an accountant looking to start my practice. Okay, well, here's the next step. So I think that that's going to be the future. I think you're going to see AI be tied in with all the knowledge that's out there for business credit financing. And I think it's going to create this customized journey for business owners to get money from where they are through that path that they're going through to, like you said, getting $5 million plus loans.
Yeah. No, I love that way that you broke it down. Um, I'm interested, like from your perspective, you know, what you think, like I guess are the most common breakdowns in sales and financing systems with what you're doing. Um, I guess in financial services, there's a there's a period of time always, right? In an underwriting process or an application from now until I can get funding. And how do you prevent things from like dropping off there and just a potential client saying they want to do business and then all of a sudden you can't get a hold of them? Like, how do you guys address that at CreditSuite?
Yeah, well, with us, I think there's several points to it. There's one point, it's a buyer cycle. And so I think that so many people are trying to get to somebody when they're ready to make a decision. And I think that for my philosophy has always been that you need to get to somebody way before they're making that decision, right? There's multiple phases before somebody gets to a decision phase where they're just kind of interested and then they're kind of exploring options. To me, you have to get to people at those points. If you are the primary educator of them in that world, then they're going to by default typically go to you because trust and rapport is built. And I think with so many options, that credibility, that trust and rapport is important, right? So if if I'm looking for a real estate agent, more than likely I'm going to choose a real estate agent who's been, emailing me for the last year on how to find the right house and how to negotiate and how to, appraisals work. And it has taught me all these things that I wanted to learn up to the point where I'm ready to take action than the guy that's on the park bench as I'm driving by, So I really feel like that is really important in the culture that we're in to be able to get to people and educate and provide value and help them get to that goal they're trying to get to, whether you're making money on that or not. And then I think by default, a lot of those people will come to you. Then I think it's just you're dealing with a lot of sales systems. And I think AI in the next 2 years is going to push out a lot of the human, at least the tier one type of lead generation that we see. I think that, in a world now where if somebody opts into my website, my AI can call them instantaneous. And all the statistics show the faster you get to that lead, like it's hundreds of % greater probability of making contact and closing the sale. So when you're talking about minutes make the difference, AI can do what humans just can't, and I think that you're going to see a lot of that. I think that you'll see a lot of the incoming calls be handled by AI. I think you're going to see a lot of the follow-up be handled by AI and the outbound calling handled by AI. I think that's imminently going to happen. And then, of course, texting and emailing and working, it's becoming harder and harder to do. Like you really need to be out there providing value. And if you're just really transactional in what you're doing with your communication from phone calls to text to emails, it's just going to get harder to operate and do business. There's just more and more and more regulations because people just don't want that. So it's really interesting, Chris. It's almost like a forced shift to providing value is what I see. It's almost like you're going to have to do business that way. And if you don't, it's just becoming harder and harder and harder to do business. And people become less and less and less likely to do business with you and harder to get in touch with if you're doing business that way.
Yeah, you bring up such interesting points on like how a business owner one thinks about the future of AI and what it's bringing into their own industry, whatever that might be, but also how to continue to add value. Not just and value can be like those things, right? Being quick and it's going to be directed by AI, but also like where do I put my personal touches then? Where do I put my personal time to give value to the clients? Can you help me? Just curious, like your revenue structure, like how does CreditSuite actually make money?
So there's several different ways that we do. I mean, ultimately, on one end, we have a software that we actually multiple different kinds of software that we help business owners combine with coaching and software go through the process of building their business credit, setting up their business where they're funding ready, and then also accessing all forms of capital in one place. And then we continue to develop new software. Our new tech will be really heavily AI based, where business owners will be able to do the whole process. Find out what they qualify for, submit documents securely all the way through to going the transaction, to getting the transaction closed. So we really combine those two things, coaching and software, to help a business owner get to their end result. Then we do a lot of funding, right? So a lot of people come to us and they just want money. They're just looking for a quick solution or money right now. They're not looking to set themselves up to get the most money, the best terms over time, like business credit and, funding ready and all those things do. So we help a lot of business owners with financing as well. And then a lot of those loans that we place, the lenders will give us an affiliate commission or some kind of kickback there as well. And then on top of that, we have a partner program. And our partner program is where we put business owners in the business of offering business credit and financing. So we've got an affiliate program, which is a free way that, someone like you can, provide value to your audience, help them get money. And then, as a result, you create a secondary income stream. And then we have the same thing with the partner program, where with our partner program, you're paying to become a partner, but then you have basically your own business in the business credit financing space. We handle the licensing and everything on the back end, and you're getting the free reports, the ebooks, the guides, the websites, the blog posts, basically an entire equivalent of a business in a box. So we just make it easy to be able to put you in business in the business credit financing space. I think we're at 9,000 business owners that we've helped get into the space of offering business credit financing. So, and then along the way, our partners are buying units from us wholesale, and then they're selling them retail, and there's extra services that they can get, things like that. So we've got a Wealth Warriors program where we teach entrepreneurs how to launch a business, scale a business, which is a recurring subscription. So those are some of the main ways that we kind of make money as a company.
Yeah, that's great that there's so many different revenue streams for sure. And I do want to obviously put it out there for anyone who's interested to chat with you or your team about different ways they might be able to participate. So it sounds like, you've got, if I was just to sum that up, you've got business owners who come directly to you who utilize your software, and there's a subscription type of model there. And then you have those who are the funding sources that will partner with you, and you'll be able to get maybe affiliate commissions through placing these business owners with them through your platform. And then you have those that want to start their own business. Maybe it's Chris's wealth management company, and I have access to your systems and your reach out there. I can plug into it by becoming a partner with your group as well.
Yeah. Yeah. For the most part, I mean, people are attracted to us to help them get money for their business, not just immediately, but set their business up to get money short term and long term. And then the second part of it is people that want to be in the business of offering business credit financing. Some are wanting to get financing for their customers so their customers can buy more of their products and services, right? And then others are loan brokers that only deal with one or two kinds of products. And like we give them, everything. They get access to everything that they don't typically offer, business credit, things like that. All the way to people that are just looking for an opportunity to go out and be able to build a business, but they don't want to buy the business, have the money to buy a business. They don't want to launch it from scratch. They want almost the equivalent of like a franchise model without paying, the hefty franchise fee. So a lot of those are attracted to us for one reason or another, to be able to come in and then, run their own business credit financing business.
Got it. Just a little curious, selfish question here. Is there any kind of financing that you stay away from, like hard money, for example, or do you deal in that as well?
We deal with all of it. And, it's really interesting because I actually love hard money. Because
Me
I
too.
remember back in a day where you just couldn't get funded unless everything was perfect, right? I mean, if we look at this, SBA used to account for like 90% of funding we get as entrepreneurs. SBA is hard to get. Like you have to have established, good personal credit, good business credit. You have to have, collateral equal to whatever you're borrowing. You have to have years of tax returns that show revenue that's climbing. And so when we look at the business owners that need money the most, the challenge credit, the startups, the SBA just is not designed designed to help those entrepreneurs. And I love SBA, nothing bad about SBA. They're just not designed to solve that problem. Now we've seen this flip, especially since Dodd-Frank, after the mortgage crisis. And now we see 90% of money come from fintech. We see 90% come from alternative lenders. And these alternative lenders don't look at the whole picture like SBA does. They look at one thing. So, revenue lending or merchant cash advances, for example, they're just looking at your credit card transactions, or they're just looking at your revenue, and they're kind of ignoring the credit and the collateral and the other things that might be needed. Or credit card stacking is just looking at your credit quality, and they're ignoring the fact that you don't have revenue or collateral. Or cryptocurrency loans are just focusing on one thing, that you have an asset, crypto, that's worth money, and nothing else matters. So it's really opened the door for so many entrepreneurs who just never would get capital if they didn't have this landscape of hard money or fintech or alternative lenders that focus on one of those strengths to be able to get money. And, when I tell entrepreneurs, if they don't like interest rate, I'm like, you don't like interest rate, change the risk, right? I mean, good personal credit, established business credit. I mean, there's a set criteria that lenders are looking for. You get it, I get it. Like, if you want to be lower risk, you do these things. But the good news is that if you haven't done those things yet, there's still money available for you. You're just higher risk. You're going to pay, a higher rate. And a lot of that's tax deductible. So we really try to entertain every kind of funding that's not like predatory, right? I mean, if you're dealing with predatory loans, but I mean, it's interesting because I got to tell you, the highest interest I've ever seen somebody take was 65%. And
Ugh.
this is 65%. But this guy was buying a piece of equipment, newer business, credit was horrible. I mean, every risk factor you could it's like, you tell, like, he's as high risk as I've ever seen a borrower. And he was buying this thing. It was a tree destumper. So he was building golf courses, and I didn't know this thing existed. It pulls the trees, it destumps tree, the golf course. Well, he still saved like $15,000 a month from paying people manually to do that. Then when, what he paid for this tree destumper, and then, he'd write off all the interest. So it's just a typical thing. That's like, in that scenario, that really helped him. The interest didn't matter. He still saved $15K a month, wrote off all the interest anyway. So it was a massive win for him, even though the interest rate was just outrageously high. And I see a lot of those circumstances where, they pay more because of the risk, but it really makes a lot more sense than if they didn't have that opportunity to get the capital to begin with.
Man, we could spend a whole nother, for sure, like session on just talking about SBA. I mean, I could tell you from sitting back in a bank as a loan officer, it's like, banks all, oh yeah, we're an SBA lender. We're an SBA lender. But when you get down to it, it's like, then why are we underwriting the deal the exact same way that we would for a conventional loan? Like, the SBA really doesn't have like a ton of sway with banks internally when it comes to the credit departments and trying to do the underwriting, because they're having to still assume the risk. Yes, it's going to be covered partially if it defaults by the SBA, but the SBA is also very hard to work with for banks in
Yeah, and
general.
that's, I think, what's interesting about SBA. I have zero bad to say about SBA. I mean, I love SBA for the purpose that they have, and then the problem that they do solve. But when you're trying to go get an SBA loan, you got to double qualify. You got to qualify at the bank level. You got to qualify at SBA's level, and you could be turned down because of lack of qualification, minor qualification on either one of those levels. So it just inherently is harder to get. And you got to be a pretty well-established business. And you and I understand that most businesses statistically do not ever make it to that level. Like, they just do not make it to that level that SBA is really even an option for them. I mean, 85, 90% of entrepreneurs never build a business that is SBA ready. And then, what are you going to do for them? What are you going to do for them? And so now you've got all these alternative lenders that have come in and fix that problem. And now we're like, it's crazy. Like 600,000 new businesses are starting every month because now we start to see that these alternative ways are there to help them get money when they're just not SBA ready at that point.
Yeah. Just for anyone who's like just starting up, what would you say is like the typical, I need money, what do I do? What's the first piece of advice you like to give those business owners starting out?
Well, there's really twofold. I mean, first of all, understand that lenders have a secret set of criteria that you've got to meet. If you meet the criteria, you get approved. If you don't, you don't. And we've got a great guide at creditsuite.com/EIN that kind of breaks down a lot of that funding ready stuff. You set up your business where you're credible. Go through and set up your, separate your business from you personally and say, you get a separate entity and an address and a phone number for your business and an EIN and a bank account license. I mean, if you understand what they're looking for and you build a business credible, first of all, it's going to help you attract more customers because you look more legitimate. But
Legitimate.
it's also what lenders want to see. And then start building business credit right away, because legitimately business credit could pay for 90% of what especially businesses in the early stages need. Like legitimately, if you go to get $10,000, $20,000 Visa cards, MasterCards, Amex without guarantees and credit checks and credit at every retailer, right? I mean, it's going to be different if you're working in an office versus if you're a trucker or, in the construction or whatever. But business credit can pay 90% of that stuff. And it's like, it helps your business fund itself. So just by building a business credit profile and score, it helps you get loans or credit lines. But then you're getting these $10, $20, $30, $50,000 limits at all these retailers and fleet cards. And that could be used to be able to fuel the business. So I think that's my first piece of advice, is set up the business where it's credible, including building business credit, and use that as a means to capitalize the business. The second thing is just, I call it the 3 C's, like cash flow, credit, collateral. Those are the 3 things lenders want to see. And if you have one of those strengths, you can get money. And if you don't, you don't. So if you're starting a business, you automatically don't have cash flow, right? You just have credit or collateral. And so then on one end, like a credit card stacking or what we call credit line hybrid, if you have good credit or a signer that does, that could, capitalize the business. I mean, legitimately, we see we just did $160,000 last week for a startup. $150,000 that you're able to get as a new business, 0% rate for 18 months. Great way based on credit. The other is, what assets do you have that could be collateral? Stocks, bonds, 401ks, IRAs, cryptocurrency. Usually as a startup business, those are the kind of things that you may have. And then as you build the business, you have inventory, equipment, IP, licenses, a lot of other stuff that could be used. So focus on the strengths. What is your strength? Is it cash flow? Is it credit or collateral? If you have none of those strengths, you really want to go in and start using business credit to capitalize the business. But if you have one of those strengths, then you can go down one of those paths to be able to get the capital you need. So I think it's that combination of understanding the 3 C's, the money you can get, and then setting your business where you're credible, including building business credit and using that to capitalize the business as well.
No, that's a great way to think about it. Quick thoughts on, those who might have a home and are able to qualify for like a HELOC, the home equity line of credit. You advocate for that, or you think that's putting your house up is for a business idea?
Well, look, it's interesting because, I'm divorced, but when I was with my ex-wife for 17 years, she phenomenal person. I'm so close to have the friendship that we have today. And I told her when we got together, I said, I'm the kind of guy that will risk it all for that I believe in, and I am still that way today, and I took a lot of risks and a lot of them paid off and some of them didn't pay off. Right. But when that whole mortgage crisis occurred, I absolutely collateralized my home to be able to build that mortgage company, and ultimately almost lost the home, as a result of that and other things. So I'd lived that experience. Now, would I do it again? Absolutely. I would absolutely do it again.
Yes, dude.
Because I'm that way, man. I'm an entrepreneur,
I totally am too.
I'm willing to double down and sacrifice it all for that I believe in. So I would absolutely do it again. Now, I think it's a personal choice. It's like you have to understand the level of risk that you're taking on. But I think what's interesting about business credit is you can legitimately get a lot of money without personal guarantees and without personal liability. There's a way to do it where you're not sacrificing your family's finances for the business. Try to always go down that path. And then if that path won't get you all the way there, then, it's discussion time within the family unit to kind of decide if what you believe in is worth, what you're willing to sacrifice to get it. And I think that's a really personal decision at that point. Yeah. Me, I'm an all-in kind of guy.
Let's go. Let's go. When you look 6-12 months ahead, what do you see as the biggest opportunities right now for you and CreditSuite?
Well, for us, I mean, I think AI is a big thing. I think that that will lead the future of opening up capital for entrepreneurs. And I'm really looking forward to doing some things over the next 6 months to 12 months that just haven't been done, to be able to just make it easier and more accessible to be able to get capital. And then I also think I think you're going to see a world where prices on a lot of things are going to come down. So I think from what people pay to get loans or credit card stacking or all those kind of things, even to buy, our technology and other people's technology out there to be able to help them along the way. I just think you're going to see I think AI is going to reduce the overall cost of business owners to be able to get what they need capital wise. And I think it's going to be an important part of making it easier and faster to access capital than what we've ever seen before. I think that's where we're driving to aggressively in the next 6 to 12 months. And that's where we really see the world heading.
Yeah, that's such an interesting viewpoint. So, thinking that because of AI and the access to information and the speed of it, you feel like that will have downward pressure on pricing?
I think you will. I mean, look, we are the biggest in the business credit building space and have been for quite some time. And our technology is thousands of dollars to get into it, with the coaching and those kind of things. But now you're getting to a point where AI is able to help you with a lot of stuff that you really needed coaching to be able to help you with, and software to be able to help you with. So you can't continue to be there. And I see a lot of people feel differently, right? But you can't hang out at those higher price points when a lot of people are able to accomplish a large part of what you're out there selling using free tools or using, different AI models that are available to them. But I do think that people will pay more for individualized coaching. I think that as AI takes over and we do more things with a computer and AI and technology, I think just being like who we are, like, all these generations of hunter gatherer, where we're just tribal people really at our core. I think that pushes people further and further away from human interaction. And so I do think that you're going to see more of a demand for that kind of one-on-one contact, that person that could be there with you to help you and feel that you've got support and confidence. I think AI will take a lot of that role too with coaching and individual strategy. But I still think that the need and desire to have more human contact and human coaching along the way, I think you'll see that kind of be increased. I think that drive, just because we pull further and further away from that with AI making phone calls and all these kind of things. So it's going to be an interesting contrast.
Yeah, you're hitting it on the head, I think, with the contrast specifically. It's like, does it turn extroverted people more extroverted or introverted people more introverted? Like, who knows what the business landscape looks like in the next 5 years? It's going to be pretty interesting, but I tend to agree with you. Like, human interaction, we are a species that is social. So that's got to be there in some way or another to incorporate it. But I love hearing about what you see for the next 6 to 12 months within your own company. This talk has been really fascinating, and I appreciate your unique insights with your unique background that you've brought to it. Obviously, you guys have been banging it up over at CreditSuite, and like, to me, when I hear about the types of things that you're working on, the types of things that you're incorporating, the types of things that you're considering for the future, it sounds like you guys are going to be in a really great spot. You're definitely, I think, well ahead of the curve on where a lot of other companies I've talked to are currently at, not just in your space, but outside of it as well. So, Ty, it's been a pleasure. Thank you so much. If people want to like find your company, reach out to you, like where's the best places to go?
We've got a great link at creditsuite.com/EIN. That's our step-by-step business credit building guide. Been downloaded well over 1 million times, kind of known as like the business credit Bible out there in the space. So that'll kind of walk through and help people get them business set up where it's funding ready, and then walk through the step-by-step process of building business credit, including the vendors to start with, all those kind of things. So creditsuite.com/EIN is probably the best next step.
Yeah, let's get them to that Bible. Hallelujah. I love it. All right, Ty. Thank you so much for joining.
Thanks, Chris. I had a blast.